Alright, what's going on everybody? It's your boy James D. Anderson at I am JD Anderson, Mr. Be Great With Your Money, and I'm coming to you really quickly just to do a short video to explain why real estate agents, you guys are kind of sitting on a tax gold mine. Alright, ladies and gentlemen, so when I actually found this out, and it kind of dawned on me that, I know a lot of people that are in real estate, realtors, people are real estate brokers, doing different things out there with real estate. Obviously, we know real estate is a hot investment right now in these times. People are doing a lot of things with properties, whether or not they're flipping, selling homes for people, listing homes, going in and doing all types of inspections. They are in the game out there in the streets. And I was sitting back and I was like, wow. As many real estate people as I know that's actually out there doing things with real estate, really getting things done, is so many people that really don't understand the tax gold mine that they're actually sitting on. So let me explain it to you. You have some people that start off part-time in real estate, and a lot of people start off like that. They're building their career, they're building their dream career, they want to sell homes, they want to deal in real estate, and they could be with a company, they could be independent, but their bottom line is they're out there getting it done. And since they're out there getting it done, they're actually out there driving their car, they're taking on expenses, they're doing marketing, they're paying for Facebook ads, Instagram ads, they're doing a bunch of different things that qualify them as running their business, operating like a business. They take none of the tax advantages that come along with it. So let me break a couple things down for you guys today so that you can actually understand what you're doing and you can maximize your tax deduction potential so you don't end up in tax trouble when you're out there crushing it, selling homes and doing things like that. So number one, ladies and gentlemen, you have to make sure that you're keeping the records on your vehicles. Whether you're taking the actual car expenses or the standard mileage rate, you want to make sure that you're documenting all that time that you're out there using your car. Now, the biggest way to do it, the biggest way to keep everything kind of clean and simple if this is your first time doing it, is that you want to keep track of your actual car expenses and you want to keep track of your standard mileage rate. Now, the reasons why that is very key is because we want to figure out how much of that actually apply to business versus how much that actually apply to personal commuting miles. All right, and when you figure that out on that mileage basis, you can take that same percentage and then use that as your baseline for your actual car expenses. Now, if you do things right, I'm not going to jump into this video, it can be 100% tax deductible if you know what you're doing. But just for story's sake, just to start off very simply, every time that you drive your vehicle, it's racking up tax deductions for you. You just have to make sure that you keep adequate records. And yes, ladies and gentlemen, of course that can apply if you actually have a job. See, let me give you an example. If you were to go straight to your job, that you work a job, but you work your real estate business part-time, if you were just to go straight to your job, your 9 to 5, and come back home, guess what? The government says no tax deductions. You can't have any. We're not giving you anything. But it's not really fair because you are making money over there, but I digress. That's something different. But let's say, for instance, you drove to your actual job, and then guess what? After work, you had a showing or a listing that you had to go check out or go meet with a potential buyer. Whatever the case is, you're out there driving your vehicle. Did you know that mileage from your job to the place and back to your home is actually tax deductible? See, what if you were actually to hit a property first, then go to work, and then hit another property after work, and then go home? Did you know, ladies and gentlemen, that all that mileage in between there is actually tax deductible? See, those are the types of things that you need to be cognizant of, because think about it. I know many real estate agents that drive 100, 200, sometimes even 200 to 300 miles per day. Well, if you get on an average of 50 cents for every single mile that you particularly drive, guess what? You're driving 300 miles a day, you're getting a $150 tax deduction. What if you did that 3, 4, 5, 6, 7 times a week? It is amazing, and I see so many real estate agents not understanding that, and they just do not take advantage of it. Number two, ladies and gentlemen, is that you have to understand that any of your marketing materials that you're actually using to build your business, whether or not you're building your list, you got an email client list, you're buying brochures. For example, something like this, you're paying for Instagram ads, you're paying for Facebook ads, you're paying for YouTube ads, you're paying for Google AdWords, you're paying for the house to be listed on different private websites. All those things are absolutely tax deductible to you. You're going inside the house, you're taking pictures of your actual property. All the equipment, the cameras, everything that you're particularly using at that point is tax deductible, ladies and gentlemen. So you want to understand of how you can actually start maximizing on those things. You're buying those signs, you're having your picture put everywhere. Yes, I know a lot of you guys go get your headshots and stuff taken for your business cards and your marketing materials. All those things are absolutely 100% tax deductible. So you have to start keeping those particular records of what you have going on, so that way it becomes a tax deduction for you. Even some of you guys that are actually with companies, you might have to pay the company a certain amount of fee every single month to be affiliated with them. That stuff is tax deductible because you are running a business, whether it be a sole proprietorship, independent contractor, you made yourself an LLC, whatever the case might be, you are absolutely qualified for those tax deductions. Number 3, ladies and gentlemen, we talked about the vehicle, we talked about the marketing. Well, did you know, ladies and gentlemen, that all your communications can be tax deductible as well? It is a huge, huge portion of what you guys are actually doing. You're on your phones all the time, you're online all the time, you're emailing people, you're contacting people, you got different services set up that you're using for your voicemails and your numbers and all those things that you guys have going on right now in particular. Those things are tax deductible. You are entitled to that. You don't know how many times I asked a real estate professional and I just say something simple like, are you writing off your cell phone bill? And they tell me no. I'm like, well, aren't you on the phone all the time? Aren't you using your phone 60, 70, 80, 90% of the time for business? Then why are you not writing off 60, 70%, 80%, 90% of your actual cell phone bill? If you got a landline, why are you not writing that off? If you got a voicemail box, a professional voicemail box that's been set up that costs you a monthly basis, why are you not using that? Those are things that you're entitled to, that you get if you keep adequate records, that make your life and your tax burden so much more smaller, and it just makes it more simple. You are entitled to that. You are a business owner. It is yours. You just have to make sure that you're being what's called IRS compliant, and that's keeping adequate tax records. And that's something that's really simple to do. So shameless plug, if that's something that you guys are really, really, really into, you can drop a comment below. It's simple to do. I got a system set up. It's crazy accessible for you to do, and it works with just about every business. I'm telling you, something that is awesome. Number 4, ladies and gentlemen, even though it's not like a big one, but it is pretty cool. You know, you can actually, when you're kind of dealing with your clients and you want to give them thank you gifts and things like that, those things are also tax deductible. Yes, you do it out the kindness of your heart, but you also can get a tax deduction for it. So who knows? You know, you might be dealing with a person that did some business with you and you gave them an actual, you know, pin-up girl lighter. Fire. Or you can be somebody that, you know, maybe perhaps you bought them a Killmonger bobblehead. This thing is so cool. I love it so much. I mean, I swear, it's one of my favorite deals. All those things can be tax deductible, gift certificates, everything that you know that we have going on, those things are absolutely tax deductible. I know you guys are doing it, and I've seen you guys do it. The real estate agents, they do it all the time, but yet they never take advantage from it from a tax perspective. The bottom line is, ladies and gentlemen, is that you have a plethora of tax deductions. I just touched on a few of them for you, but this is targeted to real estate professionals. I know we're all faced upon, you know, going out there, getting the commissions and doing what you have to do in real estate. I get it. That's what you guys talk about. You want the commission. You want the commission. And yes, you should be entitled to a commission. But then the question is why aren't you keeping most of it? So stop being a victim to Uncle Sam. Stop being a victim to the government. Get your money back. Keep it in your pocket so you're not dealing with that. I'm telling you, ladies and gentlemen, just off of those couple things that I know that real estate professionals do so much of, you're going to save so much money. I mean, just on driving a vehicle alone, I mean, you guys are probably leaving $5,000 to $10,000 on the table. So think about that. Take that for what it is. Of course, ladies and gentlemen, what we do here is we make sure we give you as many as many simple finance, personal finance things that can help you out, so that way you can go out there and be great with your money. And we keep it fun, we keep it simple, we just like to keep it a little bit loose. So ladies and gentlemen, that is it for what I got for you guys. Make sure you tag a real estate professional, tag somebody that's looking to go into real estate, show them what they absolutely can do, and share this video with them. Maybe it might pique their interest to want to do some things. So that's it, guys. My name is James E. Anderson at I am JD Anderson, Mr. Be Great with your money, of course. And listen, of course, if you like this video, drop a like, give it a thumbs up, do something for me, help a brother out if I gave you some value. There's no particular reason why not. If you didn't like this video, hit the down, whatever. It's all good. You guys keep being great with your money, and of course you can always subscribe if you got some value out of here, because we drop videos all the time, keeping it fun, keeping it loose about money, because really it's really not that hard when you start understanding it. So I'll get at you guys. You guys have a fantastic day, evening, week, quarter, whatever. Keep crushing it, and I look forward to talking to you on the next video. Peace.